Everybody, this is Jim at SP500chart.com. It's about 4:20 on June 19th, 2013, and we're going to take a look at the S&P. Had some action today, and I think we've got something that we can extrapolate from what took place in the latter part of the day. Before we get into it, I just need to remind you, as always, that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. So let's take a look. Okay, we're starting out here on a 10-minute chart and a significantly down day. Interesting to note a couple of things. First thing I want to show you is this. Coming into the day, we had this green line kind of in this position. And remember, I talked about the fact that it was hard to know for sure using this, and this exactly what was going on with this line, whether this was a breakout and a back test, and it almost looked like that's maybe what we were seeing until Bernanke has his comments, and there we go. So I'm going to change this line. Now we know this is a top, so we're going to go with this line right here, and you can see that this little outlier area right here, what I thought was an outlier, actually now lines up pretty nicely. It's still not perfect, but it's pretty close. So the other thing we talked about yesterday was watching this bottom line with the idea that if this line breaks, then we are more than likely going to be setting up a move down to test around the high 16 teens or low 1620s, or right about 1620. And let's move in on a 5-minute chart. You can see that after Bernanke spoke, we came down to this line, bounced up, came down to it again, bounced up, and I tell you, at that point it looked like, yep, it's going to hold. It really looked pretty darn good. And then this line broke, and it broke without much question. We are currently about 15 points underneath this lower boundary. I believe that's close enough to where we can call it technically significant. I'm going to measure it just to make sure. And what I'm measuring from is how far we closed down from that line. Yeah, it's about 15, 16 points. So I believe that has reached our margin of technical significance. So this means that I'm looking now for some follow through down to about 1620. And if our broader pattern holds out here, then we should get a bounce here. If we don't get a bounce here, then the next stop would be back down to about that 1598 area, because I don't think we would get much support just around 1609 maybe. But if this is going to break, it doesn't make sense that we would break by about 11 points and then recover. So I would say that the same thing holds true now that held true yesterday, and that is, if there is a trend line above us, it should now be considered to be resistance, and if there is a trend line below us, it should be considered to be support. So since we are underneath this resistance line, or at least what used to be support, I'm thinking it should be pretty much a no-brainer that we see some follow-through selling and a move down to roughly 1620, give or take a little bit. If we get a good bounce here, then we could rally on up and come back. Again, even with this line now having likely been turned into resistance, there's plenty of room still for the market to rally off of that 1620, assuming it gets tagged. I think it will, and then a move up back to the 1650s could very well take place. So guys, as we looked at things on a 1-minute chart, you can see how we really bounced a couple times on that blue line, but then finally it gave way. And about starting about 3 o'clock or so, the S&P started to rally up for what appeared to be maybe a solid back test on that blue line, but what ended up giving way. And I can't tell you exactly where these little lines should be, but this little rally that started about 3 o'clock really served the purpose of being a bear flag. And considering where we've come from, I would think that that this should continue down tomorrow. Maybe we get a little flag action, but I think we're going to tag that 1620 area. And what we're really doing is tagging this rising green support line. It just looks to me like that is very, very much in the cards. So guys, that's about all I can say for right now. You know, we were expecting some volatility today. Clearly, we got it. And again, look for support around this green line. And if this were to give, then we would know that we would expect a move to at least test that 1598, and frankly probably more. But we'll make that call if this line breaks. I kind of think it should hold, and I'll tell you my reasoning on that real briefly. We know we've got some pretty good support down here at 1598. If this line breaks, then we've got a number of reasons to expect a solid bounce right at about 1600 or 1598 again. And those reasons, at least in my outlook, don't give us quite enough room to see a significant move down based upon the height of our pattern here. So if we were to break that green line tomorrow, then I would think we would be looking for a move down eventually to get into the 1570s. I'm just a little hesitant to think that's going to happen. But I've said it, so if it breaks, we'll keep this line on the chart. But I'm much more inclined at this point to think we bounce and then we start to come back up to retest some of these levels in the 1650s. So just to recap real quickly, if there's a line above where we are now at about 1630, it would be resistance. And we got a lot of those lines right up in here. And really this extends, this whole area up in here should serve as resistance territory. Support, and then we come down to an area where we've got a number of reasons to expect even more support. But I know it seems kind of counterintuitive, but because all of this support is lined up down here, it doesn't seem likely that we would be destined to take out this green line, which would imply taking out all of this support down here as well. So I am more inclined to think we bounce and then come up here and maybe challenge these areas up here again. But let's see what happens. Clearly, this line broke, so we know to expect more downside than what we closed at at the end of trading today. So here you have it. Downward trend. And now it looks like sideways action. And the question will be, is the S&P going to eventually be able to power up over some of this resistance here and head on up to potentially re-challenge this high that was set back in late May? I think that is a likely thing to happen, but we got to get out of this region first. And that's not going to happen anytime real soon, because we're destined, it appears, to come down into the 1620s, where I'm expecting support based upon this trend line that I've highlighted right here. So guys, that's the video for June 19th, 2013. Thanks for watching. Interesting days. It's tough when you get this kind of volatility like we had today. Too bad that that lower blue line did not give us the bounce we were looking for. So look for 1620-ish coming up in the next day or so. Thanks for watching. Take care.